Hi friends, let's take a look at Ethereum together. So yes, noisy charts, yada yada, I know. Let's zoom on in and take a look at where we've come from and where we go. And this is the weekly time frame. So I put a little note on here to say that closing the week below 260 would see the prices descend below the weekly trend line. The weekly trend line coming in here at that 260 area, zooming back out, you can see that it's coming, using the bodies here on this particular one to have closes up there previously and then here, and the green line coming down and touching here these areas. So you can see that if we were to go down below that area, then that would simply be that would be a few things at once, a lower high on the weekly, yada yada, and potentially we could see prices turn around from that point there. Why are you talking like that at all, Rocky? You're asking. I hear it. Well, that's because if you draw in a couple of Fibonacci retracements, one, for example, being from the highs here in the 17th of June down to those lows over there in the 2nd of March, 24th of June. Yeah. I just didn't see the year there. I threw myself completely. Forgot it was the weekly time frame. Forgot I was looking at the weekly time frame and completely brain farted myself. Yeah, so that's from the 24th of June 2019 down to the to March 2020. Then you've got a golden pocket coming in right here. So if I zoom back in again, the golden pocket says my precious area is right here, right where we see the prices have come right up towards the top of the golden pocket. And if they were to then retrace back down underneath that 260 area, say to 258, they've also gone down below the golden pocket again area, and that would be what you could be looking at overall in terms of potential areas for a retrace. Now, of course, the world is extremely bullish when it comes to both Bitcoin and Ethereum at the minute. So I don't feel like I need to, knowing that you're not a YouTube monogamist and you're all out there watching other people on YouTube too, I feel like I don't need to go on at great extent about what the upward side targets are. Suffice it to say that 275, where we've seen the prices come up to 271 so far, 275 and going up and closing up above there on a weekly time frame would be very good for the price in terms of the bullish case scenario if you want to really invest in that. And again, then from a daily perspective though, just to make the contrast, that was the weekly at 275. On the daily, if you want to do the same thing, you're looking up to 285. Okay, so depending on how that Sunday, Monday, Tuesday, Wednesday period goes following a weekly close up in that area would be how I'd be looking at this on a daily time frame, just to not get too carried away with things and always bear in mind the risks looking at the bigger picture and the smaller picture and tying them all together. So that's how those two tie together. Then if we look down the way at the smaller time frames, what do we have in terms of the oscillating price, the oscillators down below? Well, you can see we've come up here as according to the 4-hour, the 12-hour, the 12 hour on all of them but the stochastics. Let me just verify this. Yeah, so the 3 out of 4 of our oscillators I'm using at the minute have come in without that divergence. There's a little touch of it here on the 12-hour time frame on the stochastics, but the other ones are fine. If we go up to the daily time frame, you can see this latest high is coming in higher than this previous high over here and higher than this previous high over here. So the 3 of those are tying up together to not be divergent. The stochastics as well obliging. Currently, it's premature to say that about any of these at the minute because this is still not set in stone. It could change. And the DMI as well is obliging us on that front. This high versus the last one on the MACD isn't divergent, but looking back over there to the 1st of June high, as we saw over here, then there's the potential for that divergence, and that's the potential is also there on the stochastics and also there. But so you've got a split opinion, kind of there, but mostly things are looking healthy. Mostly they are. Really, the question as we're working my way back up the timeframes here becomes as to whether or not we're going to get any more price action here, pushing us up past these zones. And we need to get above that straight line there and actually close up. And on the 2-day time frame, you've got it's in between the daily and the weekly prices. You're looking up towards 280 there on that one. So if we just go right on down then and look at how we've been shaping up in terms of the 1 hour time frame, well, you can see that by and large we're mostly not divergent, but the stochastics, excuse me, Nino. The stochastics are by divergent as well. So we've gotten a lot of the stochastics of the divergence. Are we going to see these things, the stochastics, calling out the highs on this one in the fullness of time, where in the face of the other ones, or are we not? That's kind of what that kind of sums up to be like. What about the 2-hour time frame? How are we looking at on that one? Yeah, it's the same story across them all. The stochastics keep saying, hey, look, we're divergent here compared to how we are on the other one. So we can look up like let's look a look at the stochastics indicator and figure out what the calculation is that determines that having divergence on the charts there, and then we can discuss in the comments down below this video what you think that means, or in the Discord or whatever else. So how is the stochastics? What is it? Well, the stochastics indicator, by the way, and you can see my workings out here. The stochastics indicator is, because what I did is I tried to do this a minute ago. I filmed this a second ago, and I was like measuring it all on camera. Then I realized that's just taking up way too much time. I'll refilm it and not do that. So that's here we are. So the stochastics indicator is this one down below. The yellow line is the K, and the pink line is the D on my setup. K and D there. You can see yellow and pink. So over here, the K is worked out using this formula, and the D is a 3-period moving average of the K, right? So we're really interested in the K line here at the minute, and the K is worked out by doing this here: C minus the low L14 divided by H minus L14. So what is C? C is the most recent closing price, closing being the keyword here, minus L14, which is the lowest price traded, not closing, but traded of the previous 14 sessions. H14 is the highest traded price, and L14 again, lowest trading price times 100. So if we look between this high here on the stochastics, which is lower than the previous one and therefore divergent, why is this high, currently divergent? It's premature to say that because it's not been shown to be a local high yet. Just a caveat, if the prices just continue going up, then, these things can change, okay? But just why is the stochastics divergent? Well, because of this formula. What is the formula? It's what we just looked at. Then let's put it into action. Here we go. So if we take this previous close here, this one here, just take this previous close here to work it out, and go back 14 candles to see where the lowest low is, then lowest traded price is. We come up with these numbers. 264 was the close there. If I just use that, I'm not exact on that because I'm trying to, for brevity. 264 minus 235. So the lows actually came in 14 periods back from here. The low was right the way over here at 235, okay, so you get 264 minus 235, and the highest traded price during that was up here at 271. Okay, that's just what we've got there. So that ends up being 29 divided by 36, right? And that adds up to 0.8. And if you times that by 100, you get 80, right? And then that then results in the prices being up here in around about 80 there. So more or less, I got that more or less right, 80 on terms of stochastics. Okay, so let's work out the previous period then when it came up higher than it. What was the price action like in the run up to it that led to this being higher? Well, if you go from over here and you look at the high, the close was 244, right? So I wrote that in there, 244. And the lowest trading price in the previous 14 bars was down there at 233. Now, the highest traded price during that period was 246, so which is the wick just above it here at 246 minus 233, which results in 11 divided by 13 times 100. So that's 11 divided by 13 is 0.85, and that comes up to 85. So if we look down here at the stochastics, we can see that I've worked it out wrong somehow because it's coming in at about 90, but I guess it's because of really I needed to include the actual high was what, 245.60 or whatever it was, and the actual close was 244.30. Obviously, though, that's how you work that out, right? Okay, not exact, didn't use the exact numbers, but you can see why that's come in higher than this one. So what does that look like in terms of the price action itself, and what does that mean then? What does it really mean? Well, you can see that if the calculation is the close, the most recent close minus the lowest traded price, and then the highs minus the lowest traded price. What you're looking at there is kind of the difference between where we're actually closing things out at and where the exuberance has taken us during that period that we're looking back at and saying, well, hey, if this is the case, then where, at what point have we become overbought or oversold, etc., etc. And so the close in here at 265 being lower than the exuberance up here at 271 when compared to as low as we've been trading. So you can see so you're looking at the range, the difference in range there it adds up to these numbers, the 29 and 36, which means that that during this period of change in price, then we've actually had a differential between these two numbers of 80, 0.8 when divided by each other. Whereas the differential between these two numbers, like the difference between them, the how much bigger this number is than this number, and how much bigger this number is than this number, because the bigger the number is at the bottom, which you're dividing by, then the smaller the outcome will be at the end. So that's to say that if the difference between the highs where you closed at and the highs where you're traded at is so like the difference between the highs where you closed adds up to 29, and the highs compared to the lows where you've traded at adds up to 36. So the bigger the difference between your closes and the wicks during this backward period, then the bigger this bottom number is going to be relative to the top one number. Therefore, the lower the stochastic number that you'll get on that one, right? That's the in terms of the biggest difference. And obviously that extends the opposite direction as well whenever you're looking at, in a downward trend. Then, of course, here the highs were 244, and the highest it traded at was 246, so just a little bit higher. So the differential between this block or the close versus the lowest traded and the price traded versus the lowest price traded, the highest price traded versus the lowest price traded, is smaller. So the lower number here is the bottom number in the division sum is closer to the top one. It's less of a difference between them. So the outcome is going to be a bigger number. So the trading up here, we've managed to make it up, and the closes are happening up there closer to where the exuberance has taken us so far in terms of the price action, whereas the exuberance is going up higher than where the closes have taken us. And that's what their basis is behind the stochastics there. So now, okay, some value, some takeaway for people in the episode. We do know a couple of things that we've looked at in terms of the price action. We're not bearish overall in terms of divergence with the other indicators. We understand why the stochastics indicator is looking like it's going to be a little bit divergent. It's to do with the difference between the closes and the most highest price it's been traded at during that period going back the way, and that the difference is now greater than it was then in the past on that move up. So things become looking like they're a bit more extended in terms of stochastics. But in terms of these other ones, which we'll have to cover on another time, a different episode, that's not the case. I've covered these in the past as well, so subscribers know. Like, I've looked at the MACD in the past, and I've looked at the DMI in the past. Subscribers know these things, but anyway, we are looking towards these previous highs there at the 270s and whatnot areas, looking about whether or not we'll close the weekly underneath that target, so on and so forth. So, that's us. I'm going to leave it today with this episode. I hope it's worked out, that you've got some value from it. If the prices manage to close above over the period of the next 5 days or whatever until the weekend, then you're 4 day, whatever, then you're looking at the 275 area. But in terms of 24-hour close to actually put in a higher high than over here, you're looking at 288 to the 290s, and we've got this area in between, of the 275 area that we've come up to, where we've got a horizontal serrated line in there at 280 as well, which we can see is the 2-day previous high. So that's kind of what we can look to in terms of whether or not this exuberance is really actually going to continue on, or if indeed maybe we sink back down and go below the weekly trend line. In fact, during filming this episode, the prices have come down. Is it during filming it? No, it's not. It's just no, it's not during filming it. What am I saying? But it's close to. It's close to it. We've come down close to this 259 area at 260. So if we do actually close below 260, then things are not so great. And maybe, if we did go down there, then you'd be looking out for Barks as well to bring us back down towards that 248 level that we were at before, where we'd want to see the footing being held. Because in the meantime, we can just put that there and ask that question. Great. Okay, cool. Moving on to Chainlink. Thanks so much for tuning in. Really do appreciate it. The episode worked out a bit differently than I planned at the start, but some value in there. I'm sure there is. If you found some, hit that like and subscribe button. Share it with your friends. YouTube.com/RockyOutcrop. We're the best. Blah, blah, blah. Discord. Yeah. Catch you next time.